let's run through an example here. Well, this is a good example of what we would do in certain situations. So PowerLogic, sounds like a tech company, is an SEC filer and has a year-end balance sheet date of December 31, year 5. PowerLogic plans to file its financial statements with the SEC by March 15th, year 6. The following all happened after the year 5 balance sheet date. I'm going to go through each one and we'll discuss each one at a time what we do. Do we record, or do we footnote, or do we do nothing? So customers upset with the quality of PowerLogic's products sued the company in year 5. A judge ruled in favor of the customers on January 15th, year 6. The result is that PowerLogic must pay $100,000 to the customers. Currently, PowerLogic has a contingency amount of $250,000 on its balance sheet. All right, so because this instance dealt with year 5, something in year 5, and our financial statement date is year 5, so our period is year 5, this one we're actually going to have to record. And if this was dealing with a lawsuit in year 6, it would not be recorded, simply just disclosed. And what adjustment are we going to make? Well, we need to get rid of this $250,000, and we would need to account for $100,000 times however many customers there are. Don't believe it mentions how many customers there are. Nope, doesn't say anything about that, and the question's not asking for the exact number you would do, but let's say there was 10 customers that were suing, so 10 customers times $100,000 would be $10 million, so we would need to increase it by $750,000. Awesome, so that first one was record. Next, do we record, footnote, or do nothing? Footnote also means disclose. PowerLogic announced on February 15th, year 6, plans to acquire Great Bend Inc. for $3 million. PowerLogic will acquire Great Bend using a combination of debt and equity planned for August 15th, year 8. Now, first thing I'll ask, does this affect anything in year 5? I mean, this sounds like it could be a big deal, right? We don't really know if $3 million is a lot for this company, but let's assume it is. Let's assume $3 million is a good chunk of change. Well, would this affect year 5, though? That's the real question. And no, I don't see anything about year 5. So we don't care. We're not going to record here. We're simply going to disclose or footnote this because it affects us going forward. It's important, but it does not affect year 5. We are concerned with year 5. So I am going to say that's a footnote. Put an R for this. That's record. I'll put a D for disclose. Also, footnote is totally fine as well. The company has an AR balance of $1 million at the end of year 5. On February 12th, year 6, a major customer announces a bankruptcy and that it will not be able to pay its vendors. The amount owed to the company is $250,000. Now, regardless of the amount, should we accrue for this? Does it affect year 5? Well, yeah. We had a balance of $1 million at the end of year 5, and the customer announced the bankruptcy. So we should write off this $250,000 out of the $1 million. Even if it was $10,000, I mean, okay, if it was like a $100 balance, sure, let's not worry about it because of cost constraints. But, this is a decent chunk of change. This is 25%. So we are actually, in this one, going to record. We're going to affect our numbers, make an adjusting journal entry to reduce AR to now $750,000. Lastly, another customer that usually pays its invoices on time still had a good amount of invoices outstanding at year end. Unfortunately, the reason for the lack of payment was from a fire that burned down the customer's whole operation. As a result, the customer had shuttered its doors permanently and ceased all communication. So they're just ghosting the company. Not fun, but I guess it happens. Do we disclose it? Do we record it? What do we do? Well, I don't see it affecting year 5, although it does say still had a good amount of invoices outstanding at year end, so that would insinuate year 5. Well, at year end, this one's actually a trick. There's 2 points of logic here. First off, at year end, the customer usually pays the invoices on time, and it seems like they're a pretty legitimate, stable customer. So there was no evidence at year end that the customer was not going to pay the invoices. Now, these events, presumably the fire that burned down the customer's operation, this happened after year end as well. So because of that, this affects year 2 as compared to year 1, or 5 versus 6. So because of that, this is kind of the logic, the thought process here. Don't shoot the messenger. If it sounds strange, I'm just telling you the thought process behind the GAAP rules, the FASB rules. This would be a disclosure, a footnote. This would not affect year 1's numbers, even if it gave us a real number, right? Even if it gave us an actual number for the invoices, this one would simply be a disclosure. No adjustments are required. If it was not material also, there would be no disclosures required, but it doesn't tell us enough of that, so we would just assume to disclose. That wraps up our 4th point here. And yeah, I think that was a good example of subsequent events. Keep practicing as many like this as possible. You'll do well. You'll probably see this as well in the audit exam, so does not hurt. Just like anything else in this exam, I've told you to. If you're killing 2 birds with 1 stone, again, I do not advise hurting birds. I am pro animal safety. Do not do that. But if you can knock out 2 things with 1 study session, that is wonderful to see.